Dynamix Corp's bold merge, from DYNX to the Ether machine and Ethereum exposure. Brace yourself, a seismic shift could be underway in the crypto universe. Shares of Dynamix Corporation, ticker DYNX, a US-based blank check company, surged nearly 17% when it unveiled plans to merge with the Ether Reserve LLC and form a new powerhouse dubbed the Ether machine. And trust me, this is the part most people miss. The combined firm aims to manage in excess of $1.5 billion worth of Ethereum, the world's second-largest cryptocurrency after Bitcoin, opening doors for investors who crave institutional-grade crypto exposure. But here's where it gets controversial. Are corporate balance sheets about to become the next battleground for crypto assets? Let's break down what's happening. 1. Understanding the players and the deal. A blank check company, often called a SPAC, starts life with no operations. It raises money through an IPO solely to pursue a merger or acquisition. Dynamix will merge with the Ether Reserve LLC, creating the Ether machine, which will be listed on Nasdaq under the symbol ETHM. The deal is structured to bring in roughly $1.6 billion in fresh capital, including $1.5 billion of committed funding. 2. Who's backing the move? Heavyweights in the crypto arena, Kraken and Blockchain.com, are contributing more than $800 million via an expanded stock offering. Andrew Keys, co-founder of the Ether Reserve, is anchoring the transaction with about $645 million and will take on the role of chairman. 3. Why Ethereum matters here. The Ether machine plans to kick off with a reserve of 400,000 Ethereum tokens, giving investors an efficient route to tap into ETH's growth without buying coins directly. This signals a wider trend. Institutional investors are increasingly warming up to crypto, seeking to blend digital assets onto their ledgers. 4. The bigger picture. Ethereum's recent price rally toward the $4,000 mark has drawn attention, and the Ether machine isn't the only SPAC chasing ETH exposure. Similar moves include SharpLink Gaming, SBET, BitMine, BNMR, and BTCS, all aiming to build Ethereum reserves. Reflecting growing confidence, DYNX shares have climbed more than 22% year-to-date. Thought-provoking questions. Could this be the tipping point where corporate America embraces crypto at scale? Or are we risking volatility by shoehorning digital tokens onto traditional balance sheets? Do you agree that SPAC mergers are the fastest shortcut for institutions to get into crypto, or is a direct holding safer and more transparent? Share your take in the comments below. Let's spark a real debate. Why Ethereum, ETH, outperformed Bitcoin, BTC, over the last decade? Think you've missed the crypto boat? You might want to hear this. Some experts argue that investing in Ether, ETH, over the last decade could have made you not just wealthier, but as much as 30 times wealthier than if you'd bet on Bitcoin, BTC. Surprised? You're not alone. Andrew Keys, co-founder of the newly launched Ethereum-focused investment company The Ether Machine, made waves on CNBC's Squawk Box when he claimed that those who chose Ether in its early days would have seen their wealth multiply dramatically. Originally, Keys suggested a 50x return compared to Bitcoin, though he soon clarified in a post on X, formerly Twitter, that the actual figure is closer to 30 times, still a jaw-dropping number by any standard. Keys is no outsider in this debate. As chairman of the Ether machine, which intends to go public with an enormous stash of over 400,000 ETH, worth approximately $1.5 billion, his voice carries clout. This would make it the single largest public vehicle for institutions to gain exposure to Ethereum, surpassing BitMine and SharpLink, whose own ETH reserves stand at 300,000 and 280,000, respectively. We're building the world's biggest Ethereum treasury, Keys asserts, candidly noting that he himself doesn't own Bitcoin. In his words, "I'd rather have an iPhone than a landline," a metaphor highlighting his preference for novel, adaptive technologies. So why does Keys believe Ethereum is poised for even bigger things? He points to the Genius Act, emphasizing that Ethereum stands to benefit the most because the majority of stablecoins, those vital, price-stable cryptocurrencies, are built on its network. Ether's dominance isn't just opinion. Around 90% of the tokenized asset market floats on Ethereum, Keys claims. He compares this to the so-called power law dynamic scene with Google, where 90% of internet searches go through one engine. But here's where it gets controversial. Yes, the numbers do show that Ether has massively outperformed Bitcoin if you go strictly by certain starting points. But is it a fair comparison? Let's dig deeper. Bitcoin's debut goes all the way back to 2009, while Ethereum's first block wasn't mined until 2015, over 6 years later. In Bitcoin's earliest days, famously, when someone spent 10,000 BTC on 2 pizzas in 2010, it was valued at just fractions of a cent and had no trading market. By the time it was listed on exchanges, it hovered around 5 cents per coin, and since then, its value has skyrocketed by more than 234 million%. When Ethereum launched in July 2015, Bitcoin was already trading at $280. New ETH tokens entered the scene at about $1.60, and since then, Ether has grown by more than 236,000%. No question, both assets have created generational wealth for early believers, but starting points matter, and so do market maturity and trading environments. And this is the part most people miss: recent market trends aren't as cut and dry. While Ethereum has yet to hit a new all-time high in this cycle, it's still down 23% from its 2021 record of $4,878. Bitcoin hit a fresh peak on July 14, already notching a 78% gain since its last cycle top. In fact, Ether's price has barely budged since 2022, while Bitcoin keeps climbing. The Ether machine is betting big, planning to go public on the Nasdaq with over $1.6 billion in backing through a high-profile merger with SPAC Dynamix Corporation, creating a new powerhouse, according to Reuters. So, what's driving this recent momentum shift toward Ethereum? Jeff May, Chief Operating Officer at BTSE, explained that investors have been pouring into ETH, fueling its strong rally as many expect it will soon close the gap to its all-time highs. But here's the question that might divide the room: is it fair to compare Ethereum and Bitcoin returns so directly, given their vastly different origins and historical contexts? Was the opportunity really that much greater with Ether, or did both simply offer once-in-a-lifetime chances at different moments? What do you think? Has Ether truly outshined Bitcoin, or is this just clever number spinning? Do you prefer the steady rise of Bitcoin, or are you enticed by Ethereum's potential? Let's hear your take. Drop your thoughts, challenges, or counterpoints in the comments below. After all, in crypto, no story is ever final, and the debate never truly ends. Ethereum Treasury goes public, $1.5 billion SPAC deal explained. Imagine a world where cryptocurrency and traditional finance converge in a groundbreaking deal worth over $1.5 billion. That's exactly what's happening with the Ethereum crypto treasury, which has agreed to go public through a merger with a blank check company. This move marks a significant milestone in the rapidly evolving landscape of digital assets, as more and more players in the space seek to tap into the vast resources of the public markets. But here's where it gets interesting. The merger is backed by a staggering $1.5 billion in crypto and stock financing, making it one of the largest deals of its kind. At the heart of this massive undertaking is Ether Machine Incorporated, the company that will emerge from the merger as the surviving entity. And what's anchoring this new venture? A whopping 169,984 Ether, courtesy of one of the co-founders, plus a stock financing of over $800 million. And this is the part most people miss. The deal also includes up to $170 million in cash from the trust account of Dynamix Corporation, the special purpose acquisition company that's merging with the pool. That's a lot of firepower, and it's clear that the players involved are betting big on the future of digital assets. So, what does this mean for the future of cryptocurrency and traditional finance? Is this the beginning of a new era of convergence, or just a flash in the pan? We'd love to hear your thoughts. Do you think this deal is a game changer, or just a clever play to grab some attention? Share your thoughts in the comments below.